A special thank you to each of our subscribers who make this channel possible. Here's today's story. In a surprising turn of events, U.S. President Donald Trump announced a temporary pause on tariffs affecting most of America's major trading partners, a move that has sent shockwaves through global markets. The decision, which allows for a 90-day period of negotiation, comes as the world grapples with economic instability and mounting pressures on the U.S. economy. Trump has opted to maintain a 10% duty on nearly all global imports while significantly increasing the tax rate on Chinese goods to an unprecedented 125%. This strategic pivot appears to be an attempt to refocus the ongoing trade war, narrowing its scope from a global conflict to a more targeted confrontation with China. The announcement, made via Trump's social media platform Truth Social, was met with immediate positive reactions from the stock market. The S&P 500 index surged nearly 7% following the news, indicating a strong investor response to the potential easing of trade tensions. However, the specifics of how this tariff pause will impact non-China trade partners remain somewhat ambiguous. Trump cited outreach from over 75 countries seeking trade discussions as a key reason for his decision, claiming that their lack of meaningful retaliation warranted a re-evaluation of his tariffs. Historically, Trump's tariffs have been a contentious issue, with the previous rates set at 20% for goods from the European Union, 24% on imports from Japan, and 25% on South Korean products. The newly implemented 10% tariff represents a reduction but still signifies an increase from prior rates, raising concerns among business leaders about the potential for recession stemming from ongoing trade disputes. Executives from various industries, including aviation, have expressed apprehension about the chaotic economic landscape, which has made long-term planning increasingly difficult. White House Press Secretary Caroline Leavitt defended Trump's actions, framing them as a strategic maneuver to enhance his negotiating position. She asserted that the media has misunderstood the implications of the tariff pause, suggesting that the global response is indicative of a desire to engage with the U.S. rather than align with China. This narrative, however, contrasts with the reality that many U.S. trading partners have already begun to retaliate against Trump's tariffs, further complicating the economic landscape. Market analysts have been warning of the risks associated with Trump's tariff policies, which have contributed to a decline in consumer sentiment and corporate confidence. The rising interest rates on U.S. Treasury notes have begun to signal a loss of investor confidence in government debt, a traditional safe haven during economic turmoil. Following the announcement of the tariff pause, there was a slight easing in the interest rates, suggesting a temporary relief for investors. Despite the positive market reaction, experts caution that the long-term effects of Trump's tariff strategy remain uncertain. John Canavan, lead analyst at Oxford Economics, noted that the mixed signals from the administration regarding tariff negotiations have created confusion. While Trump has indicated a willingness to negotiate, his previous statements suggested that tariffs would remain in place, leading to skepticism among economists and investors alike. As the global economy continues to react to these developments, the automotive industry, in particular, braces for further uncertainty. Delta Airlines CEO Ed Bastian commented on the lack of strategic direction from the administration, highlighting the difficulties faced by businesses trying to navigate the chaotic economic environment. The ongoing uncertainty has led many companies to revise their financial forecasts, with some previously optimistic projections now tempered by the reality of fluctuating tariffs and trade relations. The implications of Trump's tariff pause extend beyond immediate market reactions. Treasury Secretary Scott Bessent has indicated that reaching agreements with various countries on tariff rates could take months, and the administration's lack of clarity regarding the future of the 10% tariffs adds to the uncertainty. As negotiations unfold, the focus will likely shift to how the U.S. can balance its trade relationships while mitigating the risk of recession. In conclusion, Trump's decision to pause tariffs on most nations while escalating duties on Chinese imports reflects a complex interplay of economic pressures and political strategy. As the administration navigates this challenging landscape, the coming weeks will be crucial in determining whether this pause leads to meaningful negotiations or further entrenchment in the ongoing trade war. Investors, businesses, and policymakers alike will be watching closely to see how these developments unfold and what they mean for the future of U.S. trade policy. That's all for this story. We upload videos every day covering many different subjects, so hit that subscribe button to stay informed. Thanks for watching.